No, students, the two lectures that, sorry for this bit of this thing, I just was upgrading the entire system. So, students, in this particular context, if you see now very carefully, in this particular context, students, please have a look over here. Students, we will have two particular session which is exclusively that one is now and my tonight one more session wherein I will complete all your comprehensive question, because if you see the ITC has got very big questions. Have you seen that? So the entire emphasis is that those big questions we will try to finish it off. All these big questions. So therefore, you will be done with the entire big questions. Then the last area that would be left, students, the last area that would be left would be on the reversal part, like exempted turnover, zero rated. So that would be my last particular area. So that again might be one session more or two session more, and we will be through with ITC. So that is the idea behind dealing with the ITC. So that, and one more session, students, I think would be on ISD. ISD will not take much of time, students, because ISD any case is all practical oriented, and it is very simple concept. So in fact, again, directly going by the practicals, ISD can easily be finished it off. So what I will do, students, right now, in this case, we will be discussing this, and one more session I will have late tonight. So we will finish it off all the comprehensive question of ITC. And then thereafter, students, the next one is what? Then thereafter, as you know, two session more and we will be through with the ITC. While we will be dealing with our small topics that will keep on going on. So that way, students, the entire plan has been set. Let's proceed further in this context very systematically. So now, students, in this particular context, if I just, I hope that, students, the homework which I am giving it to all of you, you people are doing it in this regard. All of you are dealing with that, students, the homework part. If you would have any queries, students, Kavita, Aveen, Aishwarya, please do take a note of those particular any queries on these homework part and do let me know on that. Okay. Now let's start, students. In this context, quickly I will just deal with some questions, and again you will have one or two questions today as a homework as well, just after this session, which you will do it for your practice, so that the practice will help you get that confidence to crack this particular paper. Now, students, the question that we will do, I will directly start with the biggest questions only, so that our burden would be less now. Then small questions only would be left. So my target is to attack the big question first. Okay. So therefore, what will be left will be the small questions. And in that league, which question I have marked? Students, just tell me one thing. You have done question number 25 last session. No? Question 25 has been done. Question 25, students, has been done. It's a bigger question if I. Students, take question number 28. Question number 28. These are the truths. Private Limited manufactures taxable goods. The company is registered under the GST in the state of West Bengal. The company has provided following information. Yes, Kavita. Just take a note of it, all of the students, which the questions we have done. 1, 2, 3, 8, 10, 12, 21, 25. These questions we are done. Okay. So now we will finish it off, the remaining set of questions. So private limited manufactures taxable goods. Acha, Kavita, that should also include the homework particular part also. So the homework question of the last session also it is done. So that is something that you people will have to deal with it. So these I think we have done it in the class. The question that you have highlighted. Private limited manufactures taxable goods. The company is registered under GST in the state of West Bengal. The company has provided following information in relation to inward supplies received by it in the month of October. In the month of October, students. Invoice received. Invoice received for inward supply, students. Be careful, students. So if it is for inward supply, students, it is for ITC. All of you agree to this one? If it is the inward supply, is it ITC? And the answer is yes. So this is about the ITC, students, in this regard, isn't it? Let's proceed further. So raw material X. Next is your rent of factory building 1,50,000. These are ITC. Let's move forward fast. Raw material Y. Car purchased for the use of director 1,20,000. Consumables 80. Now tell me one thing, whether this car which is purchased, students, for the use of the director, what is your take on that? On this car purchased by the company, whether they will be getting the ITC? And the answer is no. There is a block credit, students. There is a block credit. There is a block credit. After the students, it is the consumables, which is 80,000. Which is 80,000. Why, students? Machinery for being used in the manufacturing process. Will be getting the ITC, and the answer is yes. Raw material Z, fine. Technical consultancy for improvement in manufacturing process, there is no issue. Raw material W, imported from China. What is your take on this one, students? Imported from China, IGST will be charged on such import. IGST will be charged, students, on such import. So therefore, apart from the customs duty, even the IGST is charged. Apart from the customs duty, even the IGST is charged on such import. So we will see in that. Now let's proceed further, students. Point number 1. Balance in form GSTR 2A on 28th October. Balance in form GSTR 2A on 28th October. Invoice of serial number 1, 2, and 3 uploaded by the respective suppliers in their form GSTR 1. Okay. Invoice of S number 1, 2, and 3 uploaded by the respective suppliers in their form GSTR 1. So 4,80,000 you can see over here in this regard. Now, students, tell me one thing. This is primarily, students, balance in form GSTR 2A. Invoice of 1, 2, and 3 uploaded by respective supplier. So, therefore, students, this is sorted. 1, 2, and 3 sorted. So, that supplier has already filed the GSTR 1. And therefore, through GSTR 1, auto population has happened, and accordingly, I am in a position to get it. Now, I just need to show you one condition, students, because I now know what kind of question that they are targeting over here. Students, just can you just come to one condition, students? Let us quickly read the condition, students. Please come back to the condition, so that even the theory of the condition is over. Because now I'm knowing where these people are heading now, in what direction the question is heading. So quickly, let's first finish it off that conditions, and then it is better to come to this particular part. Okay. So in that section 16, the general condition, students, if I can just take you through very quickly, students. Please come to this one, students, very quickly. General condition, then that questions. So please have a look, students. All of you. Block credit we have done. Now come to this general condition, students. In the general condition, if I can just please have a look. Section 16. Can you see this chart? Let's read this particular this thing and this page properly, students. We'll just read this particular page properly, and also this particular part. We'll just read section 16 completely. Section 16, students. Let's first read because this is going to come heavily. Provision of section 16 relating to eligibility condition. What is that, students? So now over here, students, if you see very carefully, the registered person to take credit of tax paid on inward supply of goods and or services. registered person take credit of tax paid on inward supplies of goods and or services, students, used or intended to be used or intended to be used in the course or furtherance of business, used or intended to be used in the course or furtherance of business, students, if these six conditions are fulfilled. Okay, so what are the six conditions when I can take the ITC? So the six conditions are there. He has valid tax invoice, debit note, prescribed documents, paying document. So that document has to be there. Which is the document? Tax invoice of the supplier, or the debit note, or the prescribed document, as the case may be. So the strength of the document is very important. Only then the recipient can avail the credit. Second one, details of invoices or debit note uploaded by the supplier in his GSTR1. This is what we are into it right now, students. In the GSTR1, students, isn't it? That's exactly the point. So if it is not in that GSTR, students, if it is not uploaded in the GSTR, then students, what can happen? You all are aware of it now. So if GSTR1 has not been filed, then, or students, the second one is the invoice furnishing facility. What is this invoice furnishing facility? That QRMP, the previous chapter itself we have seen. As far as the return was concerned, students, so far as the return was concerned, we have seen this particular part, isn't it? And that exactly the point. So therefore, this is precisely what the situation is. Now, can we just put across the question, students? Question number 28. I'm just making a reference of it. Question number 28, which we are doing it right now. Or using IFF and details as communicated in form GSTR to be auto-populated statement. That is the auto-populated statement, students. Tax on such supply, students, tax on such supply has been paid. Tax on such supply has been paid. So who should have paid it? The supplier should have paid it. Or if it is the RCM case, then the recipient should have paid it. After that, students, he has received the goods and or the services. In this context, he has received the goods or service. Receipt of the goods is critical, students. Receipt of the goods, is it critical? And the answer is yes. Goods or services. Details of ITC in respect of said supply is communicated to the registered person under section 38, not restricted. So this ITC, technically speaking, is not a restricted supply. He has furnished the return. Who has furnished the return? Under section 39 in this context. So this is for the recipient point of view. In this regard. In this regard. And last is students, last point, students, just last point. Bill to ship model. Are you aware of the bill to ship model? I hope that you people would be aware of it. So one of the conditions, students, is about that the goods should have been received. The goods should have been received, students. One of the condition is the goods should have been received. Now, what is this bill to ship model, students? Bill to ship to model, students, in this case. So the bill to ship to model, students, in this regard is, can you see that? So here is a supplier X and Y. So Y is the recipient. Now Y is directing to this one. So as per the contract, X is required to deliver the goods to whom? So the contract is between X and Y. But the delivery, students, delivery has to be done by whom? To the Z premises. Delivery at the premises of Z. So if the delivery is at the premises of Z, now the contract is between whom? X and Y. Y being a recipient. Now Y has instructed that, look, boss, directly you give the goods to Z premises. Like for example, students, like some of the students who have given me the book and all. So the courier person who is say in Delhi, So I tell him that, look, boss, this is the address. The printer, I tell him that these are the addresses. You are supposed to dispatch the goods from that place to the other place. So that is what he does. It becomes what? Contract is between me and the printer. Okay. But bill to me, he is billing the invoice to me for this entire work. But where he is shipping it? Shipping it to the students' address, to all of you. So if he is shipping it to you, I am the recipient, but I am the recipient of this thing, a supply. So I am the recipient. So if you people have received it, you are Z. If you people have received it, so it is as good as I have received it. Have I deemed received it? And the answer is yes. So there is a concept of deemed received. So once it is received by you, so for him it is deemed receipt. And if it is deemed receipt, you can say that the condition, is it satisfied? Deemed receipt, then the condition is satisfied. I hope that all of you are clear with this one. Perfect. Other condition, students, are simple conditions. Let's finish it off because this will keep on coming up in different questions. So I will not keep on coming up to this section 16 again and again. So I'm just putting it once so that the remaining questions, whenever it will come, is as good as we already know the provision. Okay. So if depreciation is claimed on the tax component, this is very common sense part. So if supposingly the supplier has given the, say, a plant and machinery, and that plant and machinery, and on that supply there is a GST also charged. So if you have capitalized the value, including the GST element has been capitalized, and then you are claiming the depreciation on the entire value, including the GST portion in it. If you are claiming the depreciation on the entire value, including the GST portion on it, at the prescribed rate of depreciation, in that particular case, students, tell me, indeed, in that particular case, students, as you can see over here, what exactly is the point? That exactly is the point. You cannot, now, students, you cannot avail the depreciation. Goods received in lots, students, goods which are received in lots. This is also an important particular point. This is also an important particular point. If the goods are received in lots, so only when the last lot has been received, only if the last lot has been received, that you will be eligible to avail the SENVAT or the ITC. Just bear this particular point in mind, friends. Only when the last lot is received, that you will be eligible to claim the ITC. So not at the earlier point of time. Only when the last lot is received, in that situation, that you will be eligible to avail the invoice. So there is only one invoice, but that in invoice there are say 10,000 units to be supplied. So they are supplying 2,500 now, 2,500 later, 2,500 later, so on and so forth. So only when you receive the last consignment of 2,500, that you would be made eligible to avail the ITC. Now, time limit for availing ITC. What is the time limit, students, in this case? ITC pertaining to a particular financial year can be availed by 30th of November of next financial year, or filing of annual return, whichever is earlier. ITC is pertaining to a particular financial year can be availed by 30th of November of the next financial year, or filing of the annual return, whichever is earlier. Is that clear to all of you, students? This is what after that. So there are cases in the question that you will find later. When some question will come that this invoice was pertaining to some 2 years back. Okay, you will come across with some question now. Invoice was pertaining to students some 2 years back, and in today's say month of April, you are computing what the GST liability, including the ITC credit. So the information in the question was some 2 years old invoice was being received by the SSC. He found the invoice at this point of time. Will he be in any position to take the ITC? And the answer is no. He will not be in a position to avail the ITC, but there is only one exception to that rule. What is the exception? If there is a concept of re-availment of ITC, what is re-availment? You will come to know now. Re-availment of the ITC, in that case, even in the case of re-availment, even if it is after 180 days, even after it is 180 days of the invoice date, it can be taken. But it is only for what? Only for re-availment of ITC. What is re-availment of ITC? See one example over here, you can see over in this case. Please read this one, students. So now, students, you came to know in this context. All of you agreed? 180 days is the time limit, students. You can see for yourself. So what they have said is that, students, if you have not paid to the supplier within the period of 180 days, students, so you have taken the credit, but you have not made the payment of the value, including the amount of tax therein, to whom? To the supplier of the goods. Then you will have to reverse the credit. Okay, but if supposingly later on, after 180 days, if you make the payment, then can you re-avail the credit? And the answer is yes. Now, if you make the payment after say 2 years, after 2 years, if you are making the payment, can you re-avail the credit? Yes. Whether this condition that was time limit of availing the credit, the time limit of availing the credit, whether that time limit will it come into our way? Answer is no. That time limit, students, will not come in our way. I hope that all of you are clear with this one. Now, apart from that, students, if you can see over here also, this is also an important significant point in this particular context. If it is a reverse charge supply where I am the person who is liable to pay the GST, now is it, if I am the person who is liable to pay the GST, then am I supposed to make the payment to my supplier within 180 days? Answer is no. That is the logic behind it. There is a logic behind it, and I appreciate that you people would know that why in RCM I don't have the obligation to make the payment to the supplier. Other, deem supply without consideration. In that context, obviously, there are many cases, Section 7 we have seen. In those cases of Section 7, which we have seen, in those cases of Section 7 that we have seen, what exactly the point? That exactly the point, students. That exactly the point. So this is a point that would be there in this regard. So therefore, students, therefore, if you all see in this regard, this is the point. Now, deem supplies without consideration. Deem supplies without consideration. We have seen that additions made to value of supplies on account of supplier liability being incurred by recipient of the supply. So this is about the additions made to the value of supply on account of supplier liability being incurred by the recipient of supply. So what it is? So it was supplier who should have, like, remember in valuation topic we have done a lot of additions. Why we have done the addition in 15.2? Because this amount was supposed to be borne by the supplier, but it is met by the recipient. So what we do? We add to the value of supplier. But that is only for valuation purpose. That you are adding it to the value of supplier. That does not mean that the recipient is supposed to pay for that value. Why he will pay? On the contrary, it is the recipient who has incurred that value, which was an obligation of the supplier. So there is no particular. It is only for valuation chapter that we have added in that valuation under 15. That is it. It does not mean that the recipient is supposed to pay to the supplier for that, isn't it? And that exactly is the point. So this is what it is, students. These are the conditions of section 6. Now, since you all are now through with this, on that I'll now come back to the questions. So all the questions that we are now going to discuss will cover up all these things, family, that we have discussed just now. So let's deal with that comprehensive questions quickly. Come back to the students. Question number 28. Question 28. Students, so what they have told you here, first particular serial number, balance in form GSTR 2A on 20th of October, invoice at serial number 1, 2 and 3 uploaded by the respective suppliers in their form GSTR 1, which is rupees 4,80,000, which is rupees 4,80,000 students in this context. So therefore, this is what it is. 4,80,000 students in this regard. Now, obviously for this 1, 2 and 3, I will be in a position to avail the ITC 1, 2 and 3 because the GSTR1 has been uploaded, which is one of the condition of section 16. Which is one of the conditions of section 16. Let's come to point number 2. Balance in form GSTR2A on 11th November. Invoice serial number 1, 2 and 3 and 4 uploaded by the respective supplier in the form GSTR1. 6 lakhs. Now students, if you see over here, 4. This one, 1,20,000. So supplier may have already have paid. Here, see the supplier has to provide the output supply. Na? So who is the supplier of the car? The dealer of the car. The dealer of the car, he would have put up in the GSTR1 the statement of supply, his output supply. And in that statement, he would have said that one car he has sold to this company. And therefore, it is getting reflected in a GSTR2A auto population. But does it mean that I am supposed to if it is this case, in the GSTR1, already this particular point has been there in this context, and therefore what? Therefore, students, this particular point, students, would be, so how much is there? 4,80,000 only would be considered. Only 4,80,000 would be considered. So 11th October is the 11th November probably is the cutoff time. Now balance in form GSTR 2A on 20th of November. So auto population would have happened, and then we know 20th of November, friends. 1, 2 and 5 by the respective supplier in form number GSTR1. Compute the ITC that can be claimed by Sunshine Private Limited in its form GSTR3B for the month of October to be filed by 20th of November. By 20th of November, students, the due date of filing of GSTR1 and GSTR3B for the month of October is 11th of October and 20th of November. That we already know. In fact, we have done it in the previous lecture itself, in our returns topic itself. Subject to the following given above, all the other conditions for availing ITC have been complied. Okay. Please have a look, students, over here in this context. ITC to be claimed. This question is only about ITC, na? Only ITC, students. So students, if you see over here, balance of GSTR 2A on 11th of November, on 11th of November, students. So by 11th of November, students, 6 lakhs value of the value of the invoice has been uploaded in that portal through the invoice in GSTR1. Okay, but out of that, 1,20,000 worth of value of that supply, which supply? Motor vehicle will not be available. That is the point. So I've already discussed this particular point with all of you students. Now, the next particular point, students, which has been there. The other particular, okay, what about the other information over here? For 5, 6, and 7 students, all that remaining part students, key from here, 5 to 9. 5 to 9 students. See that? So tell me one thing, students. That is very interesting part. Very important. Please mark this one very important. Let me put it this way for all of you. For 5 to 8, whether the GSTR1 has been filed by 11th of November, students. And the answer is no. In this context, this is not there. In fact, 5 enters into the portal on 20th. That auto population in 2A, GSTR 2A, it enters on 20th. This enters on 20th of November. So by 11th, it is not there. And what about 6, 7, and 8? It is not there at all. It means there is no GSTR1 file on that. 6, 7, and 8, even the GSTR1 has not been filed by the supplier. 5 he has filed, but he has filed after 11th of November. 5 he has filed, but that supplier of that consumables, he has filed his GSTR1 after 11th November. So therefore, now the company is getting it after that. So this he will be in a position to avail the credit in the next particular month, but not this month. So the credit would be available, yes, but when he will avail the credit? In the next month, not in this month. For 5. But 6, 7, and 8, GSTR1 has not been filed by the supplier at first place, the supplier. So if he has not filed the supplier, if the supplier has not filed the GSTR1, which is a precondition, then how I can claim the ITC? Then how I can claim the ITC, students? I cannot claim the ITC. That exactly is the point, students. Okay. Now you tell me for point number 9. For point number 9, students. Can the supplier of raw material W, who is a from China, who does not understand English at all, he only translated in Chinese language, is he required to file GSTR1 and then I will be in a position to avail the ITC? The supplier from China who is supplying the raw material W, will he be required to file the GSTR1? That is the question, students. And the answer is no. And if he files GSTR1, then that will be in Chinese language, which nobody can understand. So therefore, the point is that, students, there is no requirement in this case to file GSTR1 by the supplier from China. And if there is no requirement to file the GSTR1, then definitely, students, in that case, can the recipient, can they avail the ITC on that? If there is no requirement to file the GSTR1, then whether the recipient, can they avail the ITC on that? And the answer is yes, they can. That's exactly the point. So therefore, students, point number 9, which you have to be very careful about it, in this context, you will say there is no requirement on the part of supplier in China, on the part of supplier in China to file GSTR 1. How means why this supplier in China? How can he file GSTR 1? And is he required to file all the GSTRs or not? He is supplying and I'm importing the goods from him. And if he is not required, so therefore that condition that we have read in section number 16 will apply only if that condition that we have read in section 16 will apply only if there is an obligation on the supplier to file the GSTR 1. Only then the recipient will check on the uh, on the GSTR 1 if it has been filed by the supplier, and then the recipient will be eligible to avail the credit. But if the supplier at the very first place is not required to file the GSTR 1, it will not bar it will not bar the recipient to avail the ITC. It will not bar the recipient to avail the ITC on the basis of the document he has got, because he will have to pay the GST no? Through reverse charge, the customs document and all the things. So he will have to make the payment on the basis of the documentation. IGST is making the payment no? On the customs at the time of payment of the customs duty, he is making the payment of the IGST. So therefore, he will fill those data in GSTR 3B. He will put this detail, and therefore he will be in a position to avail the ITC. Now, friends, if you see the answer in this context, balance GSTR 2A on 11th November. So on by 11th of November, which supplier has already have filed the GSTR 1? So supplier happened to be 1, 2, 3 and 4. 6 lakhs is the value. But in that 6 lakhs value, 1,20,000 is block credit. So therefore ITC that you can take is 4,80,000. So far as invoice 5, 6, 7 and 8 is concerned, 5 is not uploaded by 11th. It is uploaded on 20th. 6 and 7 and 8 has not been uploaded at all. So therefore we cannot take the credit. 5 we cannot take the credit in this month. Next month we can take the credit. 6, 7 and 8, till that supplier will upload it, we can't do anything on that. Let's proceed further, students. Invoice number 9, 50,000. So yes, see the note number 4, students. Just I'll take you to note number 4. In this context, please have a look. The restriction of availing ITC is imposed only in respect of those invoice. The restriction on availment of ITC. Where is the restriction? Which section? Section 16. Is imposed only in respect of those invoice, details of which are required to be uploaded by the supplier. Are required to be uploaded. So this is the game at the end of the day. Whereas in this case, was he required to upload? Answer is no. And since the supplier was not required to upload, therefore full ITC. So I hope that all of you are clear with this one now. What is the next question, students, in this context? Let's have a look. Next question which are marked. Because I'm making a sequence of this question, students, now. All the questions are being. Take the next question, 29. Yes, definitely. Since they are giving all the information about the GSTR 1 for all the invoices. So since no information has been given to us for the remaining part, so definitely they would not have been filed. Point number 29. Question number 29. Mrs. Diva Fashions, proprietor of Mrs. Diva, a registered supplier in Ludhiana, Punjab, under GST law. has made the following supplies in the month of February. A registered supplier in Ludhiana, Punjab, under GST law has made the following supplies in the month of February. What is that? Supply of designer silk dresses packed in designer boxes to a boutique in Mumbai, Maharashtra, as per contract entered with the boutique amounting to rupees 25 lakhs. Amounting to rupees 25 lakhs. The supplier of designer silk dresses packed in designer boxes to a boutique in Mumbai, as per contract entered with the boutique amounting to rupees 25 lakh. Students, that is the first point which has been there. Now, if you see further, point number 2, in this regard, supply of 600 kits at rupees 1000 each kit amounting to rupees 6 lakhs to Mrs. Aurora in Amritsar. Supply of what? 600 kits at rupees 1000 kit amounting to rupees 6 lakhs. To whom? To Mrs. Aurora in Amritsar, Punjab. Each kit consisted of one silk dupatta, one sari brooch, and one lips. Now, students, obviously this is a mixed supply. You can easily make it out. Point number 2, because see, this is a kit. Now, students, at the end of the day, students, it's a kit. So you can easily make it out that this is a case of a mixed supply. So that is what it is. Let's see further. And mixed supply, students, highest rate applicable. Mrs. Diva organizes a fashion show in Chandigarh. Zion Export, a registered entity in Jaipur, has sponsored the show, for which Mrs. Diva Fashion received rupees 7,50,000 from it. The students, in this context, so she's organizing a show, and Zion Export Limited, a registered entity, has sponsored the show. So here, students, the in that particular context, you can see it is a registered entity. And if it is a registered entity, students, then whether the RCM, students, will that be applicable? Quickly. The answer is yes, students, in this context. So the RCM, students, will be made applicable, students, over here in this regard. We'll say, sir, but we are not aware of it. So those students who are not aware of this RCM topic at this particular point of time, on sponsorship service, this RCM is applicable. Okay, so just try to, those who are not aware of it, no, just for the time being, you can take a note of this thing separately. In any case, in RCM, it is there. Sponsorship service wherein the recipient happens to be a registered entity. Okay, so therefore, RCM is applicable. So if RCM is applicable, then the supplier Diva Fashion students, please tell me one thing. Be careful, students. For Diva Fashion, I need to ask you one important question. For Diva Fashion, will he be liable to pay the GST? Answer is no. And if she is not liable to pay the GST, then in that case, can this be considered as an exempt supply? When your output service or output supply is not liable for GST because of RCM, then whether, students, then whether it will be considered as an exempt supply? Whether it will be considered as an exempt supply? And the answer is yes. And the answer is yes. And if it is considered as an exempt supply, do you know what will happen? The ITC will have to be reversed. Proportionate ITC will have to be reversed because it is a part of the exempt supply. So please go through that definition. Students, please go through that definition of exempt supply which I had taught you in the first class or second or third class. There I have made you write exempt supply. In your notes also it would be there. So therefore, in the exempt supply, you will find also in the exempt supply, students, you will find one more entry. Which entry? The entry of which supply which is not charged to the levy. In fact, that we discussed in some Just couple of class back, we discussed this particular point. Supply which is not charged for levy. What supply which is not charged for levy? You all are aware of it. You all are aware of it, students. Supply which is not charged for the levy. Indeed. So which supply, students, is not charged for the levy, students, in this particular context? Alcoholic liquor for human consumption. That 5 petroleum product. Whether even those supplies considered as an exempt supply? And the answer is yes. So for ITC purpose, the scope of exempt supply is vast. Huh? So these are some typical, these two cases are typical cases which I'm talking about it. Supply which is not charged for levy, and the second one is this supply on which there is no liability because of the RCM. So both of them are reverse charge. Both of them are exempt supply. And if it is an exempt supply and I would have availed the ITC, so the ITC needs to be reversed. Keep that point in mind, students. Anyway, let's proceed further. 200 kits are given as a free gift. Students, free gift. Free gift to whom? To customer. Please recall. Students, please recall. Free gift. If you are giving it to your related person. Students, free gift if you are giving it to your related person. In that particular case, students, in that particular case, students, it is not considered as it in if the free gift or a supply without consideration, a supply without consideration. Students, please tell me, supply without consideration to whom? The supply without the consideration, students. To related person. Is it a supply under section 7? Answer is yes. Supply without consideration to unrelated person. Will it be a supply? Answer is no. Answer is no. So quickly refer the supply topic, all of you, in this regard. Quickly. So students, now I hope that all of you have read it now. Have you all read it, students, now? Everyone. That exactly is the point, students. So if you see now very carefully, students, point number two, free gift to customers. What we are going to say? Free gift to customer, students, not a supply. Okay. So therefore, the answer is nil. The cost and everything has got no relevance. I'm not reading it further. Let's read further, students, in this regard. Point number five, professional services provided free of cost by Mrs. Diva to her independent married sister to set up her own boutique in New Delhi. Now, students, professional service provided again free of cost to whom? To Mrs. Divya, to her independent married sister. Independent! Independence is the key, students. Remember? Now, sister is related person. Students, sister is related person only if what? Please tell me. Sister is a related person, student. Only if. Only what? Indeed. If she is dependent. If she is dependent, students, over here. Now, the fact that she is independent at first place, the fact that she is independent, students, at first place, therefore, she is not a related person. And if she is not a related person, even point number four, even point number five, not a supply. Let's talk about to point number six. Mrs. Diva Fashion enters into a contract on 1st of February 2021 for 3 years with Mrs. Shikha, a local model, to act as a brand ambassador. Act as a what? As a brand ambassador. For their product, students. For their product. For rupees 1 lakh per annum. Ms. Shikha terminated the contract on 2nd of February 2023, and as per the contract, Mrs. Diva received 25% of the total contract fees paid to Ms. Shikha as the contract was terminated 3 years. Before 3 years, students. Please tell me now in this case, students. Now, students, can we therefore say this particular part that this is a case of a liquidated damage? This is a case of liquidated damage, students. And can you say, students, it is about for tolerating a non-performance? Am I getting this 25% amount for tolerating the non-performance? No. This, we remember we have discussed this part when we are doing supply. The consideration. In the consideration part, students, this particular point came up, and there, this is merely a case of a liquidated damage. It is not a case of a supply. It is not a case of a supply for consideration, because here it is not about tolerating the non-performance. No, it is not about that. It is about the fact that the cancellation of the contract resulted in this particular amount to be given. So therefore, liquidated damage, students, the point that you will write over here in this case is that liquidated damages is not equal to, is not equal to what? Tolerance. tolerating non-performance. Simple meaning, student. Simple reason. Tolerate is not equal to tolerating non-performance, and therefore it is not a. This is what. Fine, students. Now, students, all the GST rate has been given to you. Now, students, other information is given below. What is the other information? All the amount are exclusive of GST. GST. But point number B, if you see, Mrs. Arora paid interest of 8850, inclusive of GST. If the question would have been silent, then we would have considered including of GST. The question would have been silent then. For delay in making payment to Mrs. Diva Fash. Now, students, in that case, you do the reverse calculation. Now, this is about what? It's not a This is not the interest on loan advances or deposit. So therefore, in that case, this is a part of your consideration amount, and accordingly it will be subject to GST. This interest will be subject to GST. Now, how you will calculate the amount of GST? Do by doing the reverse calculation. By doing the reverse calculation. I hope that all of you are clear with this one. Fine. I think now, so this is actually not an ITC topic. This is actually a valuation topic. So good for recapping the valuation topic through this question. So I think that you will be in a position to deal with it. Okay. Now the next question, students, now in this context, which are marked all of you. Please come to question number 31. Question number 31, students. Shama Limited is registered under GST in the state of Maharashtra. It has its registered office at Mumbai. It has its registered office in Mumbai, students. So if you see over here, that the Shama Limited is registered under GST in the state of Maharashtra. It has its registered office at Mumbai. It is engaged in the business of production, manufacture, and supply of fresh fruit, vegetables, fresh juice, and fruit pulps. It has made the following intrastate supplies during the month of July. During the month of July. Now, students, if you see over here, it has made the following intrastate supplies during the month of April. Point number one: fresh fruits 1100, vegetables 1100, fresh juices 2000, and carbonated fruit drinks 200. So these are all amount in lakhs. Okay, so these are the supplies that they have made. In respect of the above supply, the company has received the following inward supply. So therefore, there now would be the element of ITC in this. There will now be the element of ITC, students, in this case, isn't it? The point. So see over here, students, in this regard. All these are the supplies that you have received on which you will decide about the ITC. Now, if you see first and second supply students, fresh fruit for further supply and vegetables for further supply. On that, the supplier has not charged any GST and obviously will not charge it because these are all exempt supply. This falls under the category of exempt supply. Therefore, no GST is charged by the supplier and therefore there is no GST amount which is reflected and hence no ITC can be taken. So the amount is zero. See point number 3. Fruit pulp used for fruit juice and carbonated drinks. Point number 4. Sugar used for fruit juice and carbonated drinks. Point number 5. Preservative for fruit juice and carbonated drink. Preservative. Sorry. Water for fruit juice and carbonated drinks. Point number 7. Administrative expenses 40. Marketing expenses 50. That is point number 8. Point number 9. Purchase of machinery capital goods for fruit drinks manufacture. For fruit drinks manufacture students 40. Thereafter point number 10. Motor vehicle for director official use. Motor vehicle for the director's official use is how much students? 100. So you tell me about this motor vehicle for director official use. Will you be getting the ITC of that? Answer is no. So for all the remaining part, it is fine, but this is a block credit. Point number 10. Further, for making the supplies of fruit juices, it has used the service of GTA based in Ahmedabad, which have charged rupees 20 lakhs as charges for its services. Such GTA did not exercise the option to pay GST itself. So, students, in the RCM chapter, you will know that GTA has two options. Either the GTA can go with the forward charge mechanism or he can go with the reverse charge, which means that he will not be liable to pay the GST. So here in this question, they are telling you that the GTA has not exercised the option to pay the GST by its own, which means that RCM would apply, which means who will pay the GST? This the registered D person, in this case the recipient. Rate of tax on GTA reverse charge is 5%. We know that. GST rate as on the output supply students is as follows. Please be careful students. Fruit and vegetable is exempt supply. See that? Fruit and vegetable students, are they exempt supply? And the answer is yes. And now you tell me if that is the case students. Can you see that? Fruit and vegetable students. Is an exempt supply students. Now, if you see, therefore, students, in this context, what is the implication? The implication would be careful, students. 1 and 2 is exempt. 1 and 2, any case, there is no ITC, but the ITC available on what? See, fruit. Thereafter, fruit pulp used for fruit juice and carbonated drinks, sugar used for fruit juice and carbonated drinks, preservative for fruit juice and carbonated drinks, water for fruit juice and carbonated drinks. All that particular point is there in this context. So therefore, in this context, students, you can see in this regard, so now fruit pulp used for the fruit juice and carbonated, so all that particular point is there in this particular context. Okay, now just the most important point, students, comes in this point number 7 and point number 8. Point number 7 and point number 8, students. See, this is a common one. Rest everything is one on one. But the administrative expenses on that in this context, students, if you see, there is a CGST and SGST, and for marketing it is IGST. Now this is common for all, including those two supply. Which supply? The two supply, which is the fresh fruit and the vegetables for the further supply. In this context, so with that, students, what we have to do? We have to do a proportionate reversal. Will we have to do a proportionate reversal or not? And the answer is yes. Now, how you are going to do a proportionate reversal? So the amount is known. These amount are known of the GST. So first you will take the ITC and then you do the reversal. How do you do the reversal? So this amount into exempted turnover. How much is exempted turnover? Exempted turnover is known to you. Exempted turnover, students, you are aware of it, na? What is it? This is the exempted turnover. This is the exempted turnover. So I hope that all of you are clear with this one now. So this is the exempted turnover, 2,200 divided by total turnover. How much is total turnover? Total turnover is 4,400. Because this is the only crux in this context. This is the only crux, students, in this context. So, students, this is the point which has been there, which you just be very careful. And then on this particular amount, this two amount, common expense, these are the common, na? So this I will refer this as, students, this is as common inward supply. Rest of it are specific. This is the only which is common. Rest of it is specific, students. This is the only which is common, students, in this context. That exactly the point. That exactly the point, students. So with this, we are through with this particular proposition. So students, now, okay, tell me about this GTA part, students. GTA. So GTA, students, 5% on this 20 lakhs. You will have to pay. So how much is the amount? 1 lakh. So first you will pay for this GTA, and that payment has to be in cash. That payment has to be in cash, and once it has been paid, the reverse charge mechanism will apply. Once it has been paid, students, whether the RCM will that apply, and the answer is yes. That is how it will be considered in this regard. So now then, let's have a look, friends. Competition of ITC available with Bhama Limited for April. So, so compute the output GST liability, available ITC, and payment. Output GST liability, students, is a very simple particular thing. Output GST liability, students. Available ITC. This is second question. And what is the question? And payment to be made by from electronic cash and credit ledger by Bhama. So technically speaking, there are 3 layers of question, 4 layers of question. So this is what it is, students, in this context. The simplest one which I can see over here is that in this context is the what is the total GST which is payable. Output GST, students, that would be payable. That is a very simple particular exercise. So first two is 0. That is fresh fruit and vegetables are 0. For the other two, which is your intrastate sale of fresh juice, and this one of the carbonated fruit drinks. So fresh juice and carbonated fruit drinks, students. If it is intrastate, then this is the amount 6%, 6%, or 14%, 14%. So therefore, your output GST liability is known. Output liability is known, students. In this regard, that exactly is the point, students. This question, students, let's see the ITC which is available. How much is the ITC which is available in this entire question? Now, if you see, first you will take the entire credit. Now, please understand, in ITC available, two important point I have already discussed with you. The GST on the GTA, you would have paid and you would have taken the ITC of the GTA. That is one point. So you would have paid and then you would have taken the credit. And the second part, as far the GTA is concerned, sorry, second part is that the common expenditure. So what is about the common expenditure? First, you will take the credit and then you will reverse the credit. Proportionate reversal will happen. How you are going to proportionate reverse it? I told you the formula. This is the only two things that you have to be careful about it. Rest of it are very same. Whatever has been given, take it. So from the fruit pulp, which has been given to you, CGST and SGST. Thereafter, friends, this actually, okay. So all these are been given to you in this context. So these are the items for which you are taking the various CGST, SGST, and I think for preservative it is IGST. This is IGST, and marketing expenses also it is IGST. Okay, this is the reason, students. This column which is coming in between is reason. Now transportation part, students, as you can see, one. The transportation, students, as you can see, how much was the amount? 20 lakhs was the invoice value of the GTA of that 5%. Of that 5%, so one. That is the amount. and that is again from Ahmedabad it is coming, na? So Ahmedabad, so therefore the place of supply, students, in this context, place of supply is Maharashtra, location of the registered recipient. This is important, students, location of the registered recipient. So therefore it is IGST which you will claim the credit of it. The GTA, Ahmedabad, location of the registered recipient is in Maharashtra, Mumbai, and therefore it is the IGST that will be charged, and for which you will pay IGST, students, first in cash, and then you will take the credit. First pay the cash and then take the credit. Machinery, students, that will be available. Motor vehicle block credit. So total is how much, students? 28 of CGST, SGST is 28, and then 31 is the IGST. Now of that, now you have to do the reversal. Reversal of the marketing and administrative. So that is how much is administrative? 2 and marketing is 10. So common credit CGST on administrative expenses being used commonly for this thing. So 2. So that 2 lakhs each. Na? So how much is the exempt turnover? 2,200. How much was the total turnover? 4,400. We already calculated that. So therefore 1 lakh in this context. And then IGST marketing expenses, students. For the marketing is how much? 10. 10 lakhs into 2,200. This is 5. So the total ITC now which is available for set off, this is important one. From your output liability, you will adjust this ITC and the net cash. Students, please be careful. Huh? What happens from your total output liability? The output liability also known to us only from that uh, from that the from fresh fruits and from vegetables there is no ITC. There is no GST liability. Only for the juice supply and carbonated drinks. For juice supply and carbonated drinks, that there will be what? That there will be a GST charge. That there will be a GST charge. That exactly is the point. That exactly is the point. So I hope that all of you are clear with this one. Every one of you. So friends, this is all the things has to be looked upon. Is that point clear to all of you, students? So now, students, total output liability. Only for the two items there will be total output liability. For the two items there will be total output liability. Now on that, students, you will minus what? The ITC. What ITC, students? You know the ITC that you've calculated, no? Just 27, 27, 26. Okay, so therefore that is the electronic credit ledger. Okay. Now this amount, students, whatever it is, you will add on that the GST that you are supposed to pay to RCM, which is through the ECA, electronic cash ledger. So that you will add it. And then after adding this, you will add say the total liability to be paid through ECL. The total liability, students, that is to be paid through the ECL. I hope that all of you are clear with this one. Is that point clear to all of you, students? So now if you see computation of the net GST payable, now this we already discussed it. So for the fresh fruits and for vegetables, the CGST, SGST, everything is nil. Intrastate sale of the fresh fruits and the sale of the carbonated fresh, only for these two there would be output tax. So total output tax liability. On the contrary, this we have to calculate first. The question we should have calculated this first, and then from that whatever you have now, students, the credit that you have calculated. Now in this credit, which credit has to be adjusted first? Which credit we will get first, students? First will be 26. IGST has to be exhausted completely. How much is the IGST liability? Unfortunately, student, there is no IGST liability. Unfortunately, there is no IGST liability. So I can use this IGST liability. Students, now in such case, can I use this IGST liability against the payment of CGST or SGST in any manner, in any proportion? And the answer is yes. So here, any case, students, it doesn't matter because see, we are using 26 for SGST liability. Okay, and please see your CGST and SGST is the same. Your CGST and SGST is the same. Your credit of CGST and SGST is also the same. So it doesn't matter now. You can do it full, you can do equally, whatever you want to do, you can do it. But please finish that IGST first because that is a priority. This is the order which we have already learned. After that, students, the second one is this 27 and 27. CGST, SGST credit set off against the CGST and SGST liability. So then you will use your own particular balance, particular respective amount, and then the net GST which is payable through electronic cash ledger. Add to that the GST which is to be paid by reverse charge. So this GST would be the IGST that you have to pay through reverse charge because from Ahmedabad to Maharashtra. So finally the amount to be paid through electronic cash ledger is this. I hope that all of you are clear with this one. Every one of you. That exactly is the point, students. That exactly is the point. So with this, students, we are done with this proposition. One of the other big question already being done in this context. Now, students, therefore, now I'll do one question with you, question number 34. And now 32 and 33 will be homework. So I'm doing now. So just homework, students. Now you are 34. Sorry, 33 and 34. Sorry, 32. So this two question, students, would be a homework. Let's come to, students, in that case, two questions I'm giving it immediately after this lecture is over. Now, students, all of you, please come to question number 34. Students, please take question number 34. Mr. Vijay, a registered supplier, receives 100 invoices for inward supply of goods or services. Involving GST of rupees 10 lakhs from various suppliers during the month of October. Compute the ITC that can be claimed by Mr. Vijay in his GSTR 3B for the month of October to be filed by 20th of November. In the following independent cases, assuming that the GST of 10 lakhs is otherwise eligible for ITC. So he's a registered supplier, students, receives 100 invoice involving GST of rupees 10 lakhs from various suppliers during the month of October. Compute the ITC that can be claimed by Mr. Vijay in his GSTR 3B for the month of October to be filed by 20th of November in the following independent cases, assuming that GST of rupees 10 lakhs is otherwise eligible for ITC. Case number 1, students, out of 100 invoices, 80 invoices involving GST of rupees 6 lakhs have been uploaded by the suppliers in their respective GSTR 1 filed on the prescribed due date, therefore. So out of 100 invoices, students, 80 invoices involving GST of rupees 6 lakhs have been uploaded by the supplier in their respective GSTR 1 filed on the prescribed due date, therefore. Students, what are you going to say about it? Out of 100, 80 has been uploaded in GSTR 1, which means 20 has not been uploaded. So out of the GST of 10 lakhs, only 6 lakhs GST you can take the credit. 4 lakhs, can you take the credit? And the answer is no. And the answer is no, students, and that exactly is the point. This is case number 1. Come to case number 2. Out of 100 invoices, 95 invoice involving GST of 9.8 lakh have been uploaded by the supplier in their respective GSTR 1 filed on prescribed due date, therefore. So obviously, students, 5 invoices you have not filed. So up to 20,000 worth of the up to 20,000 value of the GST you cannot claim the credit. So that is a common sense, students. So therefore, this wraps up this particular part. Just do, students, first 33 you do. Now, students, you do first 33 and then you do 32. First 33 and then 32. Fine. And then in the evening, students, late in the evening, we'll meet and we'll finish it off the balance part. And I'll see you there. The second comprehensive part.